Welcome back. Local business owners are cautiously optimistic about the future. That's as the RMB Business Confidence Index rose by 3 points to 38 in the third quarter, following an uptick in morale in the second quarter. And joining me now as we unpack the factors that continue to boost sentiment is Chief Economist at RMB, Isaah Mhlanga. Thank you so much for your time, Isaah. What does the 38-point level mean and signal at this point? And are we seeing really the ripple effects of the GNU effect?
Thanks for having me. I think there are three things that we need to take broadly from the outcome of the business confidence for the third quarter. 38 points simply means that just under 4 out of 10 respondents are satisfied with prevailing business conditions, but also that it's still much low relative to the long-term average confidence level of 44 points. So these are really very low levels of business confidence that cannot, in themselves inspire significant improvement in investment. The second point is really to say, if we contextualize this outcome to the fact that the second quarter survey was done just before the May 29th general elections. The third quarter survey was done in August, which is 2 months after the elections. One would have expected a bigger jump in business confidence, given that several risk factors have unwound, partially or completely in some cases. It then means that there is a clear, cautiousness approach from business executives as far as the government of national unity and the policy proposals that have come out and the implementation of the economic reforms, whether it's going to hold up or not. And then the third one is, if you look at a sectoral perspective, of the 5 sectors making up the business confidence index, wholesalers and building contractors saw a marginal decline in confidence. Although if you look at wholesalers, it still remain at very high levels of at 51 relative to 53 in the last quarter. It means just over half of respondents in the wholesale in wholesalers, respondents are satisfied with prevailing business confidence. And then if you look at manufacturing, it remained unchanged at 28, which means less than 3 in 10 are satisfied with prevailing business conditions. And then we have 2 sectors that showed an improvement. That is retailers and new vehicle dealers. For retailers, we saw an improvement from 39 to 45, but also for new vehicle dealers, we saw an improvement from 10 to 27. That was the largest improvement in confidence that we saw across all 5 categories. But it still remains the most pessimistic sector if we look at the 5 subsectors that we survey.
Isaah, you make very, very interesting points there, because even I noticed that, you mentioned the fact that there was a 5-point jump in the second quarter just before elections, but then there was only a 3-point jump in the third quarter after the GNU announcement. And I really would have expected better out of there. And you also mentioned that just under 4 out of 10 respondents are satisfied with business conditions. So what exactly is still keeping respondents up at night?
Look, although respondents are upbeat about confidence in the next quarter, there is also less negative worries about energy, which means that has become less of a binding constraint for most businesses. What respondents is the binding constraints of logistics, and in some cases, crime. We know of the construction mafia in the construction sector. That's still a big concern, but also low demand. And that is on the back of, if we look where we're coming from, high inflation, high interest rates have depressed demand, but also externally, we have had a muted economic growth from our trading partners, which have meant that all the export-facing sectors would have faced lower demand. So all in all, there are still some binding constraints that are both internal but also external. On the internal, side, it is logistics that is front, of mind as far as most business respondents are concerned.
In terms of building contractors, where would you say that is? Because, I mean, looking at that part of the economy, it's one that people are usually concerned about. But I also do believe that it is one of the highest ones overall at this point, if I'm not mistaken.
Indeed, if you look at building contractors, a marginal decline, it's still one of the more optimistic, even though it's below 50. The fall of 6 points to 41 points, essentially reversed the 5-point increase that we saw in the second quarter. If you were to, contextualize this, third quarter's confidence level relative to the past, these are similar levels that we saw in 2023, pretty much throughout March of 2023. There is, however, a difference in the underlying subsectors where we see outperformance, in confidence by the non-residential sector, which have continued for a number of quarters. While if you look at the residential sector, it remained under significant pressure. And we can see why. It's one, interest rates matter for the construction sector, particularly for property. And the household have been under constraint for some time. High food price inflation, high interest rates, low job growth, but also modest and quite low wage growth. That would have meant that the property sector, particularly for the residential sector, would have been under pressure for quite some time. If we then look at the non-residential sector, on the back of some recovery in investments that is largely linked to the renewable energy sector and related sectors, that would have encouraged businesses to be much more optimistic than the residential sector.
All right. Isaah, obviously we're looking at business confidence here in the third quarter. Do you think that could bode well for the third quarter GDP, or is it still too early to kind of figure out what the sentiment could mean for actual real GDP numbers?
Look, it's still too early to extrapolate the business confidence to GDP, but I think the numbers released this week for the second quarter economic growth were quite encouraging. 0.4% quarter-on-quarter growth in the second quarter is encouraging, even though it still remain quite low. Going forward, we would expect economic growth to continue to pick up, but not in a straight line. Our own expectation for this year is growth is going to be just about 1%. And next year and the year after, we're likely to reach levels of 1.8 and 1.9% respectively. There are upside, risks to our expectations, given that logistics play a big part. It's a binding constraint. And if we see faster implementation of the turnaround plan to revive rail and ports and make them more efficient and move goods from road to rail, we can see an addition to economic growth. But also from an energy perspective, we no longer expect energy to be a detractor in terms of economic growth going forward. We think the investments from the private sector that we have seen so far in rooftop solar have made many businesses more resilient to load shedding, but also Eskom's own improvement in terms of the energy availability factor to 68% on average mean that even in the event that we see a recovery in growth, it's not going to be enough to take us back to the levels of load shedding that we had last year and the year before that.
All right. Well, thank you so much for your time and giving us insights on that latest RMBB Business Confidence Index for the third quarter. That was Chief Economist at RMB, Isaah Mhlanga.